Okay, today is Sunday, October 8th, 2023. Looking at chart of MES. Um, First off, I want to show you don't want to show this account number here. That's very private, so definitely don't want anyone to see that. So to do that, click on this net lick and day trades, and under here it says privacy, turn that on. Okay, and then click outside of that here. Then now that account number is hidden and all your numbers here are hidden. So you don't want anyone to see that. And just the little instruction here, there's a little arrow here. You can hide that side panel left and right. So if you didn't want to, if you needed more space to see things over on the right side, you can do that. Right now, we've got live news and a watch list of what I call assets or tickers or symbols. So we'll just leave that open as default. Up here, you go to the monitor tab. These are the stocks that you own right now. You have one of Adobe, one Amazon stock, one Meta stock, one Microsoft stock, and 57.4 of XYLD stocks. And this is the price that I bought it at. And this is the current market price. So I bought it at 371, but it's now worth 527. So you made $155 so far. So it's the same for here. I bought it here and now it's worth $128. This one's I bought it at 97.90. Now it's worth $316 right now if I sold it. Microsoft, same 228, 46. This one is down, obviously, because I bought it at 46, but it's now only worth $39. So it's down $300, but we've been collecting dividends on this every month. So it kind of offsets that. And we're going to wait for this price to go up before we sell it. And I want to sell it because I don't like this anymore. I want to sell this when it reaches 46 again, so break even. But right now, we'll just hold on to it. And this is the futures and futures options. MES is a futures asset, or yeah, futures asset. That's what we trade. So maximize that. This tells you we have one, two, three positions. This one we have -2, -2, and -3. And this is the expiration date. So 5 days from now, this one will expire. 12 days from now, this one will expire. 19 days from now, this one will expire. This is the price we sold it at. Minus number here means we sold it. So we sold it at 583, three contracts at 583. We sold this one minus two contracts at 612. We sold this one two contracts at 575. And right now, this is what they're worth. So we sold it at this price. We wanted to buy it at a low price. Ideally, we want to buy this at zero. But right now, if we wanted to buy it back, it's 435, but we sold it at 583. So we made 25% money, or it's worth right now $22.25 if we sold it. I mean, if we closed it right now, we'd have to buy it. So this is worth right now $34. That will expire in 12 days. But I want this to go down, the market price to go down to zero. I want to buy it at $0. So I get the full profit of selling it at 583. This one expires in 19 days. It's so we sold it at 575, but it's worth if we buy it, it's a 585. So we don't want to buy it right now. We're kind of losing money a little bit, 50 cents down. This parentheses means negative. So we're losing 50 cents on that one right now, but that's got 19 days. We'll let it expire. All right. That's that. And then what I want to do now, the market's open at 4. It's 4 p.m. here, Mountain Time. The market just opened for the futures contract. This normal equities market is closed until Monday. It doesn't open until 7:30 a.m. But right now the futures market is open. So this is what we want to trade. But I want to look at the charts. Go to charts and you can type in whatever. ES is the bigger contract, but we want to look at /MES contract. And here we want to look at 5-minute time frame. Look, it's dropping big time. So this is the time frame that we're looking at. So we're looking at 5-minute chart. 5 days long. So from here to here was Friday. This was Friday. This was from here to here was Thursday. This was Wednesday from here to here. This is Tuesday from here to here. So there's 5 days. One, two, three, 4, 5. And now today we're just starting right here. And look at how much it's dropped. Then there's a little magnification here. You can zoom in more. This was Friday's price action, and this is now today. It's dropping. Zoom in some more, zoom in some more. So this was all Friday. So it went kind of sideways, down, and then up. So most of the day, Friday, it went up. But now we're starting Sunday. It dropped from Friday's last price. Each one of these is 5 minutes because I chose 5 minute time frame, right? 5 minutes, 5 days worth. So today it's dropping, which is not good because that's gonna obviously hurt. So and you can also look at what I like to look at is a daily chart for 1 year long. Go here. So this is 1 year long. From here to here is 1 year long. Each one of these is a day It's days worth of price action. So this was here on this day was Friday. This green candle, which means it went up most of the day. This was Thursday, Wednesday, Tuesday, Monday, and then Friday, and so on and so forth. So this is like a couple of weeks worth where the market just went down, dropped a large amount from 40, roughly about 45.60. See that number, 45.60? Was what about 2 weeks ago, and they all went down all the way to like 42.57. So that's a large drop, 45.60 to 42.60. So that's like 300 points down from here to here, which is not good. And now today it's coming down again. This is the candle for today. It's a dynamic. It's real time. It's showing you real time what's happening. It's at 43.08, 43.07 right now. So that's the daily time frame I like to look at just to see what is the market doing. Overall, for the last year, it's been going up, but now we're starting to come down again. This was not a good time either. Here it was coming down. Now it's coming down again. So I'm hoping it'll bounce and go up, and then all of our positions will be good. But right now, with Hamas attacking Israel, there could be some global, bad global news affecting the stock market, and that could drop this down, which is not good. So that's a daily, and I also like to look at the 5 minute chart, 5 days long. So here it is, 5 days long, 5 minutes. This is Friday's action. Now today, I want to zoom in on that and see what's going on. So you just want to know what's going on with the MES from 5 minute time frame and then the 1 year time frame. Okay. All right. So now that market's open, we're going to look at making a trade here. We don't have to make a trade right away. We can give it some time to see what the market's doing. Let me check something. Hold on. Okay, so let's go to trade. And we're going to look at roughly 30 days out from now. Okay, so it's closest 30 days is 26 days. This is here in parentheses. These numbers are expiration days. So this one here will expire in 26 days. This one here will expire in 23 days. And we have these position labels tells us that we have a trade already that we own that expires in 19 days, 12 days, and 5 days. We have 3 positions. So now we're going to go out to 26 days, closest to 30 days or 4 weeks. And we're going to scroll down. We're going to look for delta. If you look at delta, it's not showing. So up here in the layout, you can go change it to find something that says delta on it, delta, gamma, theta, vega. Okay. And then here's your puts and your calls. We just do puts. And we're going to look at the deltas. I'm going to try to find negative 0.05 roughly. Okay, so the first one that shows that 0.05 is this one here, 38.40, which is pretty good price to get in. We want to try to get a bid price above 550. So this is 550 here. But let's try the 38.30. No, not that one. 38.40. Click on the bid and see, unlock this. Make sure it's unlocked. This tells you the mid price. The mid price right here is 590, which is pretty good. But I want to see if I can get $6 here on the mid price. So let's go up one more to this one and look at the mid price, 605. Let's see if we can get 605 for that. So you can just do this. Try to get $6. So normally they don't accept orders unless it's in 25 increments. So 6, 625, 650, 675, 7, 475. So only 25-cent increments is what they accept. Make sure your number of contracts here is only either 2 or 3. We're going to go a little aggressive today. We're going to go 3 contracts. Let's look at the chart, see what it's doing. Okay, it's kind of stopped going down. So that's good. So let's go back to trade. Try to do 3 contracts at 38.50. Try to sell it for $6, which is the mid price between the bid and the ask. See that? The bid and the ask. So we want to try to get the mid price above 550, but $6 is even better if we can get it. So confirm it. Read through this. Sell 3 this contract expiring in 26 days at 38.50 strike price at $6. And you look at this, if this expires worthless, which most of these will, you'll make a profit of $90, which is what we want. So, but with the commissions and fees, the $90 goes down to $82. That's how much we'll make in 26 days. Hit send, and then go back to the monitor tab. Here's your order under working orders. Here, you can maximize that, minimize that. Tells you you're selling 3 to open the trade. 38.50 strike. The put is type $6. But the market right now is saying no. I can sell it to you for $5.95. So it doesn't look like it's going to give this to us for $6. Now it's dropping, but it could later if the market or MES drops more, it could come down to 6. We could wait for it to do that, but we're not going to do that. So if you go over here, right click anywhere on this red, cancel, replace order. All right. So they're not going to give it to us for 6. We could always go to 5.75 and we could probably get it there at that price. So I don't want to do that though. So let's change it to hold on. Oh no, it looks like it filled. So while we're waiting, it filled. So delete that. So look, see under filled orders. If you can maximize that, if it's minimized, it sold 3 for a price of $6 is what we wanted at the strike price of 38.50. So if you look at the chart, where is 38.50? Okay, let's zoom out with the negative mag here. 38.50. Okay, that's even lower than that. So let's go to the daily time frame. Daily, 1 year long. 38.50 is right here. So what we want is this. We don't want this market to come down to 38.50. As long as it stays above that and expires above 38.50, we'll make the profit. Now, this hasn't happened yet where price has come down to our sold strike price yet. But eventually it will, because these are only probability at 95% success rate. So 5%, there's a chance for failure. So when it comes down, if it ever comes down to our strike price, like let's say in next week or so, this market comes down to 38.50, then we have to do something because that's when we're losing money. So if that ever happens in the future, I'll make another video on how to handle that situation. But so far, with all of our trades, that has not happened yet, and we've made the full profit every time we've made these trades. But there is a 5% chance that it could happen, and someday it will happen, and then I will show you how to deal with that, manage that. Um, so we'll make a video on that when that happens, but it might not be for a while. Okay. So that's the first video. Make sure to keep this video private. Don't share it with anybody. Don't let anybody watch it. It's just for you to learn. Okay. And then I'll continue making more videos so you can keep learning and just practice what I told you here today.